Hello, everyone, and welcome back to the Velocity channel, where we are your bridge to financial freedom. Now, I want to ask you a question. If you owed your electric bill, right, and it was, let's say, $600, and you owed your credit card, and the minimum monthly payment on that is $600, do you see two payments or one? Before we get into that, please like, share, and subscribe, because you are about to get an education that you should have gotten in high school, in college, universities, should have gotten them in home, okay? But thankfully, you're getting it right now. All right, so listen, without further ado, let's get into this equation right here. It's very serious. We're going to tackle it in a very serious and methodical way. Let's go. Now, whether you're down to your last $600 or whether you've got plenty of money in the bank and investments or on your other credit cards, the method is still the same. The point is still the same. You can make $1 do the work of 1,000 if you use leverage, okay? Now, listen, what if you only have $600? And your electric bill is coming up, and at the same time, your credit card bill is coming up as well. Well, listen, I do want to put you in the know right before we get into that equation that there is a difference between the statement date, paying your card on the statement date, and the due date, okay? These two dates are not the same. As a matter of fact, in our automated velocity banking tool, the MoneyMax account, we actually distinguish between those, and you'll actually see the power of velocity comes in knowing when to make those payments. And that's what's paying the mortgage down. That's what's paying the auto loan down. That's what's paying all these student loans down, all these loans down in a massive way, is we know how to pay it at the correct time, and we don't have to calculate it. We put it in and it spits out what we should do for the whole month, okay? So here we go. We have $600 for the electric bill. We have $600 for the line of credit. Now, this is when you say, you know what am I going to do? I only have $600 and I can only pay at this date. I guess I'm going to call up the electric company, or I guess I'm going to call up the credit card company and explain to them why I can't do it. No. This is what you'll do, okay? Instead of segregating your income, please, let's not do that, okay? Instead of segregating your income like you normally do, like you were taught, right, by the banks, of course. You know how you were taught by the banks? Because they wanted to make sure they got your money. So look, you're segregating your income, and you think you're going to need $1,200 to make the electric payment and also to make the credit card payment. And what you're going to do is you're actually going to make the credit card payment first. You're going to make the credit card payment first, preferably, right? Let's go ahead and put in a number that you make. Preferably all $5,000 if you have enough room in your card. That way you don't have to worry about a minimum monthly payment. $600 to the credit card, I don't need to worry about that. All I need to be concerned about is this electric bill right here. And guess what? Since this $5,000 went inside of my line of credit, don't have to worry about the minimum monthly payment. That minimum monthly payment of $600 going into my cash flow, right? So I'm gonna go ahead and write this down here. And now I am in control of my money. Do you see that? See, the credit card company, right, and the electric company, guess what they have? Control, right? Especially when you pay them. But when you place your income inside of your credit card, you free up this $600 that you thought you owed to the credit card company. So now, from the credit card, you can pay your electric bill of $600. Yes, it's legal, especially if the electric company takes credit card. All right. I say, well, CJ, what if they don't? There's plenty of other methods to pay that electric bill from your credit card. It's just writing out a check, and you know about Plastique and all of the other ones. All right. But I wanted to get this inside of your mind. The income, when you segregate it, that's where the lack of control comes from. That's where you're thinking, man, I need $1,200 in order to make this work. So I got to divide this $1,200 between the electric and the credit card company. But once you know about velocity banking, once you know about how your credit card is not just a bill, but it is an asset, write this down. Your credit card is not just a bill. It's not just a debt. Your credit card is an asset. Hashtag asset. Octothorpe asset. Yes, that's what that little symbol is. It's an octothorpe. Okay. $600 you no longer have to worry about. You don't have to worry about it, especially when you're placing $5,000 inside of your credit card. Why? Because the credit card company looks at that and they say, wow, they made a $5,000 payment when really you just made a transfer. And now you're going to transfer the $600 that you owe the electric company from the credit card to the electric company. Can you do that for anything else? You sure can. That's why you get a consolidated line and not a consolidated loan. If you have any questions about that, we're definitely free to talk. All right? Consolidated line. Look into consolidated lines, folks. It's way more powerful than a consolidated loan. Does that make sense? Because when you consolidate your lines, what do you have? You have this movement. Not just one way, like on a loan. Remember, one way is a way away from you, okay? We want the revolving line of credit, thereby building our status, thereby building our credit, whether it's business credit or personal credit, and thereby letting the lenders know, listen, I am a responsible person. My business is responsible. I want you to give me more money. I want you to give me more credit. Come on, Ann. I want you to give me more of that so that I can get more houses, right? More mortgages, right? More businesses. Business opportunities, more options. Like that song says, more money, more options. Okay? Yeah. Oh yeah. You didn't know there's a song about it? So let's go ahead, clean this up, and let you know what cycle we're talking about. So here we are, cleaned up for you. The income comes in, goes into your credit card. From the credit card, go ahead and pay the bills. How am I going to pay $1,200, CJ, within such and such a time? Remember, $600 equals $1,200 when you're doing it the velocity banking way. Remember, you've got a $600 credit card bill and a $600 electric bill, right? That we just went over. You can pay the $1,200. Yes, you can, right? You can segregate the income if you'd like, or you can do it the velocity way and make sure that when you have your income, it goes all the way to your credit card, right? That way you don't have a minimum payment, because that $5,000 or however much it is that's above that minimum payment goes into the credit card, and you're paying your expenses, you're paying your bills from your credit card, and that $600 is met there, that obligation at the credit card, right? They say thank you. And then the $600 is met from the bill perspective, from the electric bill perspective, all right? They say thank you as well, because you paid it from the credit card. Does that make sense? All right, folks, listen. I want to give you back your night, to give you back your morning or afternoon. Please contact us with any questions. You know we've got the answers for you. Schedule a consultation. We would love to look at your situation, work out a strategy that is for you. God bless, and have a great night.